Good afternoon, everybody. It's Jeff Scott. It's April 21st, 2013, and welcome to this week's HGSI-based top-down review. Is it time to buy the dip or batten down the hatches? Join me as I do my journey through the markets, the sectors, and look at some of the best stocks and try and answer the question. Thanks for joining me, and let's go ahead and get started. My email address is there for any contact information. I do this for fun in my education. As you will see, I'm not affiliated with any specific vendor. Almost all the tools that I show you I actually pay for, and I feel without bias I can say what I believe is appropriate and what I think. Disclaimer, educational purposes only. Anything I recommend is just that, in the spirit of education and not investment advice. I'm a physician, not a broker. You should know that most physicians lose their shirts when it comes to investing, or should I say their white coats. I'm not affiliated with any software vendor, as I've already mentioned. I use a lot of tools, as you'll see, as I go forward. Besides HGSI, I need a real-time platform, and I use both Thinkorswim and TradeStation. I'd like to get rid of TradeStation, to be honest, but I have a lot of things that are programmed into it in auto trading, so I think I'm stuck with it. HGSI is my aftermarket analysis and charting program, very nice integrated product. EdgeRater is something I use for a number of things, including to understand what the market is doing and backtest strategies. I use Magenta for seasonal analysis, and I'll mention Woodward and Brown investing often as we go forward. Don't want to belabor this point, but one of the things that I learned from Ian Woodward years ago was he's not a guru. Yeah, right, but he says he's not a guru, but he wants you to be your own guru. And so I'm not a guru either, but I've had a lot of smart people influence my style, whether it's O'Neill, Morales and Katcher, Alexander Elder, Van Tharp, Steve Bigelow, Ian and Ron. Some of the websites I use and frequent are listed down here as well. If you want more, stop the video and look at them. I will often say that's a buy, that's not a buy. All that means is that if I was going in the direction a buy, be long, sell short, that I like the setup that I'm seeing today, which is Sunday or late morning, early afternoon. I have no idea what the market's going to look like at open tomorrow. And as a top-down investor, I'm only going long if the stock that I want to buy is in a sector that's going up and a market that's going up. Now, I do automate some of my trading using things in TradeStation and TOS from a number of vendors. As usual, I'll start with my weekend review and give you my take on where we are in the market, what I think we might be going to do over the next few days. Then we'll use HGSI to go through top-down investing, market, ETFs, industry rotation, stocks, show you a couple shortcuts, and as we go through, you'll see how I integrate this with other products. Now, I like to show this because we have to always remember where are we in the market. And we've been living up here in this uncertainty. We had a great run up the last several years, and every time I think we've rolled over, we turn up again. So it's kind of like this picture here, going up and up and up. But at some point, it's going to stop going up. We're going to roll over, and we're going to get a clear sell signal in the market. Now, we all know the old adage, sell in May and go away, and we know that this is after-tax time. So if that adage is real, it's time for it to start kicking in. And so we might see some overall pressure on the market just based upon the time of the market. You also know that I like to put this up, which is you don't fight the trend. Whatever seasonal say, whatever the market's supposed to do, you buy in uptrends, you sell in downtrends. It's very difficult to find a time to go long in a downtrend. You have these little retracements. You're much better off shorting the market or buying contra ETFs. And then if we continue to be in this back and forth Darvas box formation, you sell resistance and you buy support. That is until you break above or below those. So one thing to look at with HGSI, you can do some nice analysis on the market, and we'll look at this picture live later. But just to give you an idea of what I look at, this is a candlestick chart of the S&P 500 index. Up here are momentum indicators, bongos, accumulation distribution, and force index. Force won't show up here because there's no volume on the S&P 500. The high jump bar is a rubber band that when it gets to the top, we expect the market to pull back. And as you go back and you look, every time it's peaked, you've seen the market pull back some. Within that high jump bar now are red and green lines. If you're watching this and you're wondering where they are in your charts, you can't have it yet. They're coming soon as a program update, where we've now actually got hard-coded in green candle highs and red candle lows, green candle lows and red candle highs that are some of my reversal indicators that we'll use on stocks. We have a viable gap ups will actually give you a green paint in this bar. You won't see that in the S&P 500 per se. A DMI crossovers, I've hidden the ADX on this one. Candlesticks with an 8-day exponential, green is 17, blue 50, and red 200-day moving average. And then two sets of indicators that superimpose volume bars. The volume will be on that instrument. There are none in the S&P. The first one is Eurekas and Phoenix. These are calculated only on the NYSE. They give me a great sense of what the market is doing. So, for example, when we pulled back in November and had a green candle low, and that green candle low was followed the next day, whoops, my bad, with a Eureka, and then a second Eureka, and the Kahuna, which I'll talk about in a second. I knew that this was a market that was going to rally. And we're going to be looking, perhaps, for some of those same signals to come in over the next couple of days that might suggest to us that we have a market that is going to be bouncing versus crashing. The Kahunas are calculated on the stock itself, and they're a measurement within the Bollinger Bands of how much movement in a given day. Anything that's above 0.4 up or down will give you a dark blue up and a dark red down. Between 0.24 and 0.40 or 24 and 40% will give you a small blue, a light blue or a light red, signifying the direction. So the reason why I put this here is the last time we had an 8% correction was back starting in mid-September through mid-November, when we dropped 8.8% in 43 periods. Since that, then we ran to a green candle low here. From this green candle low, we are up 19% over 98 periods. So typically you drop much faster than you rise, but reality is almost pretty much a similar angle of ascent and descent here. Other things that I see is we've had a series of 3.5% over 8 periods, 3% over 5, 3%, 3.7% over 5. We've had a series of small pullbacks in the market. And so the question is it time to batten down the hatches, or is it time, as my title said, to buy the dips? And we'll try and make heads or tails of that over the next 45 or 50 minutes. Great day on Friday in my portfolio. As you'll see, probably the strength of this market might be the S&P 500 over the last couple of days, where it pulled back to that 50-day, has held and bounced. And if we can hold that, then maybe we do retest the ties, the previous highs. However, the reality is this is a treacherous time in the market, and any bullishness that I feel is tempered with the fact that it's the middle of April. The secret weapons of Woodward and Brown investing are Ian and Ron, and just for the sake of completeness, I'd like to go to the website real quick and just point out www.highgrowthstock.com, which I think is the best site in the market from a perspective of a software tool. I mean, it's pretty obvious that this is what I like to use, and I hope you see why. If you go to highgrowthstock.com, you get a free 30-day trial, no credit card approved. If you go support Learning Center, you will see a substantial amount of information that you can, for learning, as well as add-ons. And if you're going to have your charts look like mine, you need to use these add-ons here. And I do anticipate getting a new build in the next couple of days to weeks that will incorporate the green candle low and red candle high. Under reports, Ron Brown does most weekends, does a nice movie, and he's more into how the software works and incorporating new tricks, and I'm more into a more verbose understanding of what the market is doing. I think our analysis are complementary and not always that different. My reviews also under reports, and you can go in here or you can go into YouTube and under my name, Jeffrey Scott, and my channel, you can see, so you can search for a number of videos that I've done that occasionally get a whole lot of views. It's interesting, as the market ebbs and flows, clearly the number of views drops as the bullishness in the market drops, but still on this side alone over almost 700 views, so I'm pretty pleased with that. Also, you have Ian's blog, and typically we get blogs on Sundays, so he'll talk about what's going on in the market, whether the market's likely to go up or down, and what his thoughts are and why. All right, so before I jump now into the fun stuff, be your own guru. Make sure you have the right tools and software. Continuing education matters, and trade the market we have, not the one you think we should have. Close that down. Let me start with where we come from in this market. So in HGSI are tools that allow me to create, I can't find that, all right. Create this spreadsheet that I'm going to look at right now. And this spreadsheet I use to give me an idea of both what stocks to buy, which is the second part of the discussion, as well as how did the market do last week. Well, we all know it was a horrible market. And you can start by looking and see that only 4 groups, led by, including Woodward and Brown Best Of, even broke positive. And one of the groups that was the highest performing had one stock in, and it was actually a bearish surge. So obviously a very bad market. This was not a market for growth stocks. So these are static lists based upon what made up the list at the end of the week last week. The HGS 100, the IBD 50, obviously would be the, that list comes out once a week on IBD, so that doesn't change. What I call my holdings changes a lot, but I like to see what I was thinking from a last week, not this week's perspective, how they held up. So the S&P 500, a very brutal week, was down 2.11%. The stocks that I looked at, some of which I owned a week ago, were down 3.31. Growth stocks sucked. HGS 100 was down 3.68, and this is probably the biggest drop in a long time on the IBD 50, down 4.25. Not a great week in the market. I looked at this before, and it's hard for me to even see anything here. Relative strength stocks did well. Bible gap ups. Well, they didn't make money, but they did better than the market itself. But all in all, this was a rather lousy week in the market. I don't think I need to tell you that. My guess is you probably already know that. I like to look at TradeStation, and I like to look at Elder and look at the NASDAQ and the S&P and the Dow, just to get an idea of I'm getting signals there. And as you know, and we've talked about several times, I've been very concerned over the last couple of weeks about the bearish divergence in the MACD, and the NASDAQ broke. Right? So the NASDAQ has fallen down to the lower envelope. It's red, the weekly is blue, the monthly is blue. A red signal on an Elder tells me I cannot buy. I can either go short or hold or stay where I'm at. So very concerned about the state of the NASDAQ, and finally met our predictions with the MACD divergence that we would have a pullback. The Dow, big stocks seem to do better than the NASDAQ, not quite down to the lower envelope, but it too has painted a red price bar, blue on the weekly, green on the monthly. The S&P 500 which I've already mentioned I think has held up a little bit better, at least in some of the things I looked at. Let's take a look at this. And the S&P 500, as you can see, has bounced off the lower envelope, closed up near the high, but still it's taken a pretty big hit as well, and it's red. So just looking at my elder indicators tell you that for me to go long, I'm going to need to see some healing of the market, some improvement in the market, and that I'd be a little bit nervous about the market. So an error that I made, so let me just fix something up here. All right, we'll come back perhaps to TradeStation at some point. Something I didn't. There we go. Make sure I don't have too many. I picked them all up. All right, I'll deal with this later on. Actually, maybe not. Let me just delete. Put my DX back. All right. So now that I've got a sense that it was a tough week in the market, not that I didn't already realize that, and what an amazing week when you think about how incredible law enforcement was in Boston and actually apprehending alive one of the two terrorists. Very interesting for us to learn more about them, but what a crazy week, starting with the Boston Marathon. Obviously, all of our prayers go out to the folks that were injured there. In HGSI, I start with a top-down analysis, which is all technicals, but it's sort of a blend over the last 3 weeks, heavily weighted towards the last day or so. In this index, which is found under the Woodward and Browns, or in this group, I have a number of major indices, and I'm comparing them to each other to try and understand where is the market working and where is the market not working. So you can see up at the top for this combo, utilities, transports, NASDAQ, the dollar having strength, and down at the bottom, silver, oil, the Russell, commodities, gold in the lower half. Obviously, gold had a tough time. If I look at 5-day performance, the big winner, and really the only winner, was volatility. Over 5 days, you had utilities, bonds, and the dollar up about a little bit less than 1%, but you had the VIX up 24%. The big losers over the last 5 days being gold and silver, silver outperforming to the downside, gold. Look at 1-day performance, Dow Jones transfers, mid-caps to the 400, the NASDAQ 100, utilities. A lot of things were up a little bit. As you'll see, to me, it was all about PHARMA and BIOTECH, which made my week salvage quite a bit. The worst performer was down 14% on the volatility. So that means 24% over 5 days. It was up over 40%, or excuse me, about 40, a little bit under 40% over the 4 days prior to Friday. Now let's take a look at some of these, get a sense of what's going on in the market. We'll start with the NASDAQ, and I'm going to try and do these relatively quickly because I already made my market comments. So we'll talk more about the individual health. So it's above the 200-day moving average. The red things here are pocket pivots down. The light blues are pocket pivots up. The green and red here are DMI crossovers. We talked about the Bible gap ups. So you see a kahuna on Friday, which tells you there was a big day. No pocket pivot, so it didn't mean the volume beat the last 10 days of negative volume. So will this be a reversal candlestick here? Will we move up here? Will we see resistance from the convergence of a number of moving averages right above it? We shall see. This may turn out to be an ice-hole failure, which means not getting through the 50, and that might give us another visit down to the 200. You got the 7 and the 8 and the 50 days right above the price point. So it'd be nice to see a decisive move above that. Come Monday, you can see we've got a lot of red up here. I'm worried about the market. I think that it potentially rolls from here, but that's not to say you can't see a rally, and I'll trade the market that I get, not the market that I think I have. We want to look, let's say, at the NYSE, which is one of my favorite things to look at because it's 4,500 plus instruments, big, small, and little. Kind of looks like that S&P 500 did. You had a pretty big pullback, some negative pocket pivots. Again, turning red like the NASDAQ, right at that 50-day moving average. Certainly a gap up on Monday. Some big positive news would certainly be a great thing to see and start to give these guys a chance to go up. You also might expect there to be some resistance there. We shall see. S&P 500, as we already looked at this before, is pulled back to the 50. Healthier because it's above the 50. Now it's got to get above that 17-day. The Russell 2000 down lower on the list, and I think you can see why, where it's failed to get back since it dropped. You can see how that 8-day exponential moving average remains sort of like a carpet in a downtrend, 17 crossing below the 50. Not very attractive looking if you're a small stock fan. There was a great day on Friday, and we'll see if we get any follow through on Monday. I like to put them all together and look at the S&P 1500 because this gives me small, medium, and large 1500 stocks. And again, if you want to be an optimist, you had a kahuna on Friday. You've held at the 50-day moving average. Let's see if we can get some volume and get this thing above this week. I'm nervous, so let me just comment about the market. It would not shock me in the land of QE3 for us to get another pop up before May comes. I think we are living somewhat on borrowed time, meaning that usually you get an 8% correction. We've now gone since middle of November when the last one ended. We are getting into a tough selling season. So my guess is we'll be lower in July than we are today. It's not to say we don't go a little bit higher first. That's a guess. You want to know what bad could look like? Gold. Imagine this was the market. Talk about opportunities for short. You had was probably a moving average breakout here from a David Elliott perspective. You had a squeeze, the 200, the 17, 8, and 850 all coming together here, and then breaking below, and then really just struggling ever since. That was early February. These grays are bingos, and sometimes after bingos, it's sort of the baby out with the bathwater time. You can see a bounce, and you got a very minimal bounce before it sold off again. But what a deep sell-off. In fact, if one looks at percentage-wise, it kind of goes back to this high back here and pulls it down to the low. 129 days and 25% off. That's a pretty big discount on gold. Silver, also very trashed. And then VIX and the dollar, let's take a look at the dollar first. Dollar is bad for my stocks. And you could see here, kind of as we predicted, dollar pullback down close to 200 and bounced. So the dollar is now a very bullish picture where the major moving averages have gone from being resistance to support. Bullish dollar, bad for the market, and that might be something to watch. There's a lot of gamesmanship going with some of the different, what's the word I'm thinking of? Some of the different countries doing different things to get into a currency war to devalue, such as the Japanese. And lastly, the VIX, which had a big move for the week, but a big move off of a very low base. One can see on the VIX, we used to think 20 was a low VIX, and we cannot get and stay above that 200-day moving average. Until we do, the VIX will be continuing in a persistent downtrend. All right, so that's the market. I think you can get the idea that I'm a little bit pessimistic, although that's not to say we don't get a pop in a short period of time. Go down to industry groups, you could see HGSI has 146 different groups. If you look at that 2 to 3 weeks out, most heavily look at the last week, biotech and pharma have been monsters, and I can show you that in multiple different ways. You know, I like to look at the force because I only care about the last couple of days. In the last couple of days, biotech and pharma, with a big resurgence in home building over the last day, have mattered as well. So let's take a look at some of these. Gold, remember, this is a 2-day force, all right? For those that don't know the force, it's pretty simple math. You take volume today times close today minus close yesterday, you plot that, put a 2-day exponential on it or a 13-day exponential, and then there's rules of how to deal with that from John Sarkit of Option Wizard. But most important to me, I'm only looking at the 2-day exponential, so that's giving me just a couple of days worth of information. So don't really care about the index. Let's take a look at some of these and get an idea of what's moving. So even though I have a lot of bearish sentiment, in fact, while I'm doing that, let me before I go into this, as I mentioned, we use Bollinger Bands and Kahuna. And just to do another quick review, if this cup is a Bollinger Band, the top is the upper band, the lower is the lower band, you have 100% opportunity there, plus you have below and above. Stocks spend 95% of their lifetime in between the upper and lower Bollinger Band. You've got a mid-band. During an uptrend, they bounce between the mid and the upper. During a downtrend, between the mid and the lower. In periods of emotional exuberation, long, you have a big percent trading above the top band. In times of desperation, a lot below the lower band. If 95% of the time the stock spends within the bands, if you have a lot of stocks above or below, there's a mean reversion, reverse to the mean story where you're likely to pull back in. Edge Rater allows me, and I've already set this up, so let me just go into S&P 1500. To look at that S&P 1500, this is updated through, well, see what I get. I think we're good. 19th, 2000. Let me just update this real quick, just to make sure that that's right. So this connects into HGSI data, and as I'm talking, you can see the little blue bar on the bottom. So what I want to do is I want to use Edge Rater to take the 1,500 stocks in the S&P 1500 and show me where they fall in those buckets. And in fact, show me how many are above, how many are below. And this may give me a sense of the weakness or the strength in the market. Now, I'm going to go back and look at last weekend, because one of the things I talked about last weekend was we'd gone from oversold to overbought, and then oversold again. So let's look at Woodward and Brown, the buckets, templates, hit run. Now, we used to be able to do this within HGSI. It's using HGSI data, and you could probably still do it with the spreadsheet model, but boy, it was a lot of work, and with all the different issues that I had with Excel and macros, this is so easy. So you can see, despite the fact we had a good day on Friday, and despite the fact we have a lot of positive groups by 2-day exponential force, 2/3 of the groups are below the midline, and that you have very few stocks that are above the midline, and less than 4% are above the upper band. So this is still a market that's really weak, and not totally weak where you have 30% below zero, which would mean expect a bounce. So a weak market, but not one that's obviously overdone. Here's what I meant about overbought on Friday a week ago, and you could see 9% of the stocks were above, 12% in the 90 to 100th, 12% in the 80 to 90. So that means almost 1/3 of the stocks were at the 80th percentile or above, and not surprising the market pulled back. So we are not, if you go back, this is the 15th, gives you an idea of what a really oversold market looks like, where 25% of the stocks were below. 16th, again, the 17th, another big sell-off. 18th looked bad, and then the 19th we're starting to heal. So it'll be interesting to see if we continue to heal or not. All right. So back to my sectors, biotech. Now, there was a couple of aberrations here, but boy, there are a lot of good stocks. You notice the group rank here is 97, so it wasn't just working this week. It's been working for some time. And you notice quite a few of these stocks have relative strength ranks in the 90th percentile. So we'll start with Vertex, and I'll go down probably from the 55 to 85 in one day. They had a positive study in cystic fibrosis. This has happened before with this company, and now you could not have bought it intraday. You had to be holding it at the end of the day Thursday when the news came out. So hard for me to buy something that jumped this much. You could see a DMI crossover occurred, as well as that illustrious viable gap up. Now, I would tell you that there are a lot of people that probably will buy this at this point. It is a great story. If the drug ends up getting approved, it's a game changer. It may get a lot higher. And there are some targets of over $100 on Wall Street. Gilead, one of my favorites, a lower left, upper right. Looks like it's got more life in it. Now, the thing about Gilead is, what I like about Gilead is that Gilead's got some earnings growth coming. Now, one of the sad parts is this is a market that has really struggled from the perspective of earnings. And I saw that throughout the market as I looked at it, is that this is really a market with not a lot of earnings growth. And that's interesting. Gilead, after sputtering this year, is becoming a growth company again, trades at a multiple of 26. This is one of my favorites in biotech. They have a big AIDS series of drugs. They have some hepatitis C. They're getting into oncology. You can see the pocket pivots. Everything is green. What don't I like about it? I don't like the fact that it's riding at its high jump bar, but I do recognize it's got some earnings coming in, lots of volume, not without risk. Maybe you give it a chance to pause, but like Gilead. Amgen has been a leader for a long time. It pulled back to the 17, had a pocket pivot running again on Friday. You know, it's hard. I mean, I have some questions about long-term growth of this company, but it ran up, pulled back to 17-day. It's running again, looks extremely strong. Theravance, don't know the story here. That's either on earnings or a buyout. I would check that one. Celgene, you all know I love this one. I've recommended it on the board back in the 50s. Continue to hold it. It looks to me like it wants to run again, pocket pivot on Friday. I read it somewhere, I think from Kramer, who talked about Celgene, Biogen, Regeneron, Gilead, and maybe one other, and said that they may look expensive, but in the course of time, they may actually be kind of cheap. And so it'll be interesting to see if this becomes a cheap stock someday. But a lot to love about Celgene, and like some of the other, unlike some of the drug company world stocks, this is one that has earnings and has earnings per share growth. And now you'll look at that 20%. That's obviously lower than what Gilead's going to have. But if it can have a multiple up to 2 times its growth rate, it's got a long ways to run. And if it keeps that 24, you know, you're looking at $140, $150 stock in 2014. So I remain a big fan of Celgene. Alkermes has been one that I was in and out of. Unfortunately, I was not in this week, but it had a big jump off. And I'm going to bring down the earnings per share here. I was nervous about some of the earnings slowing, but it's been an earnings machine. I don't worry so much about 2 quarters out. And again, it will be another reason to look here. at the Market Smith product, and you could see huge earnings in 13, slowing down in 14, but less worried about 14. Might be at a good opportunity to buy this stock. You can see the index has done well. Let me see, but ISIS took off this week. Don't know why. Saw a number of chat rooms who were talking about that one. Regeneron, we talk about a lot. I know my good buddy George Lee bought some calls off that squeeze back here. What a great time to buy. You had a squeeze come together in a breakout, pocket pivots. It's pulled back a little bit. Looks to me like it wants to run. You want to talk about an earnings machine. 38 on 16, that's about 40 among friends. So maybe a 20% run from here is still doable. This is the kind of company you wonder when somebody comes in and buys it. $21 billion market cap, maybe that would scare away a Pfizer. But a lot of earnings growth. Onyx had pulled back, as we had talked about previously. Big run up, pocket pivots, probably getting fully valued right now for a company that doesn't make money. That said, it's got a number of marketed oncology products and has one license to Pfizer that caused a pop even in Pfizer with some of the data that came out. Other stories here, pharmacyclics, we talked about it several times. Give you perhaps a good opportunity to jump into it based upon a pullback. Pocket pivot here, big kahunas, and you've noticed, if you've been following this, the FDA gave its lead drug a special designation because of an innovation. One of the things here, it's $5.5 billion for a company with no marketed product. So by far not a cheap stock. I bought some Celdex last week, early in the week. When it broke back up here, I think it had a mobile breakout, it had a kahuna, hitting all-time, new-time highs. I can't say anything about it, but I like the chart pattern. And we'll see how long I stay hitting all-time new highs. Not a SPY recommendation, it's a purely chart that I bought there. All right, enough of biotech, but I think you can see A, the excitement in my voice, and B, the number of exciting looking stocks. Pharma. You know, is J&J really a growth company? Probably not, but I guess it's a safe company. Look at this lower left, upper right takeoff. You know, Ian once told us 3 kahunas and a eureka, you go and you buy. Boy, I wish I would have bought J&J back in January when it had that pattern. Railroad tracks up, 8 above the 17, above the 50, above the 200. The 8-day becomes, it's basically support. It pulled back here, which is why that bongo turned red. Not much in the way of earnings per share growth. So I don't know how much of these are purely defensive plays. You could see earnings per share growth rate, not the 20% of Celgene, 40% of Gilead, but a 7%. Multiple of 16. I think the other driver here, besides safety, is a dividend here of 3%. Next one is Pfizer. Similar pattern, although not as tight. Not much in the way of earnings per share growth, and a 3%. Next one is Merck & Company. No earnings per share growth. Seems to be moving up like the others, and its story is 3.6%. So some of this may be defensive in nature, but there are growth stocks here. If I go down and look at Valiant, another one of the holdings that I have, a nice lower left, upper right. It had pulled back. I thought it would wait for the 50 to catch up. It didn't. It had volume, pocket pivot, big kahuna, DMI crossover, everything green on Friday. I think this stock has room to run. And why I like Valiant, rather. And for those who don't know me, I love earnings. I believe that this entire turnaround from the March 2009 lows is about the same as the earnings per share growth increase, the earnings growth. So I'm all about earnings. Look how this grows compared to Pfizer and Merck, multiple 16. trades at a discount to its growth rate, unlike the others. It's in acquisition mode, probably not much in dividend mode, so for some of you it probably won't qualify, but it's a stock that I like a lot. As you see, it doesn't pay a dividend. A lot of nice stocks here. Mylan made my list as a bottom fish, and it's too early. It's on the left side of its cup, but when it breaks above the 17 and the 8, I might be interested in it. I think the generic companies are going to benefit from Obamacare, and Mylan is one of the leading generic companies, and you can see it's got some growth. It trades at a discount to its growth rate. Like I said, I put it on my list as a bottom fish and not one that I'm recommending to a growth stock investor. But I like to have a couple bottom fishes, which often make money for me over time. Another one that I own is Santeris, which we talked about last week, just continues to go up, lower left, upper right. Why would I still buy Santeris if I wasn't in it yet? Multiple of 68, growth rate of 181. Let's say that multiple drops to 25, so that'd be over a 50% haircut, and I make that $1.25. You got a stock that's worth 30 bucks trading at 18 and change. I think Santeris still looks very good. So strength, considerable strength in PHARMA and BIOTECH. Home builders. Now, they had pulled back. This may not be fair. I actually got lucky on this puppy here. I bought HomeX midweek when it pulled back as part of my bottom fishing portfolio. So I don't have a lot of bottom fishers, but what I had, this was on Wednesday, which is when I bought, or on the open Thursday morning, once it traded above the high of Wednesday. I had a stock that had a green candle low in the setting of a bingo, which is a thrashing, with a doji, which could be a stopping signal, and I put a buy order in if it opened above the high of the day because it was such a small day on Wednesday. And then yesterday they announced they were going to get some cash by selling some of their investment in a series of prisons. So I'll probably get out of the stock on Monday, or I'll have a very tight stop. But look at the earnings per share. Again, this is not a high growth stock special. This is part of my bottom fishing portfolio, and I like to keep a small percent in a couple positions there to get pops like this. I looked at the earnings per share growth rate. I saw the green candle low and a multiple of 3, and I said, that can't be right. I looked at the multiple year range in PEs from 2 to 25. I figured it wasn't going to get much lower. In fact, it was below 2 or around 2 when I did the purchase. So the next one was Lennar. Pulling back to what might be a good time to jump into this. It's got growth rate, although slowing down. It's at the 200-day moving average. I've liked Lennar. I've liked Pulte. I've been in and out of both of those stocks. You can see, even though there's a pullback here to the 50, that's on a weekly, this is a stock that's been in a nice uptrend. Now, I would put this in my portfolio list as a pullback, waiting for a signal. I need to see something come in here, whether it's a pocket pivot, whether it's a big kahuna. Now, I also note, and the reason why I made this chart is also at a green candle low, which is going to get me interested as well. So I'll be watching Lennar very closely. So I guess the rest of home builders, we'll look at Pulte and real quickly. All in a deep pullback. They didn't look so bad on Friday, but they're all downtrends. This 200-day might be a good time to pick some of them up. At least watch what they do over the next couple of days. Gold, funny to see that here, so it must have been a one-day bounce. You can see pretty big percentage move. Gold, at some point, might be nice to buy gold again. Be your own guru on that one. You're in something that's in a downtrend, and it's not even above the 8-day exponential. Had a big day on Friday with a gap up, some kickers in the list. But buy gold and silver at your own risk and watch what the dollar does as well. Eventually, they're going to go up. Internet retail. You know, we talked about orbits a couple weeks ago. Here's another, is this a bottom fish? Yeah. Pull back. Huge move this week on overstock. I think it might be an early move and maybe something to watch at. This doesn't help me. When I see that, I know I need to go to MarketSmith. And when I looked at overstock on MarketSmith, what I see is a stock that has been in the doldrums for earnings, now having 1, 2, 3 years in a row of positive, fourth if you include earnings per share growth from 11 to 12, 12 to 13, 13 to 14. So 4 years in a row starting to bring in earnings. You might wait for a pullback here, but I think this is a $25 stock. And it's selling now for $18.73. It had a Bible gap up 2 in a row, very powerful kahunas. You see the volume. You know, it might be a risky thing to buy, but might be something you might want to look at. So another place that I saw a lot of interest in was movies and entertainment. And these are groups that have been working well for a long time. In fact, take a look at these. They had a recent pullback, so let's go up through Lionsgate, see if there's any opportunities to jump in. News Corp, nice move up, pulled back, had a pocket pivot on Friday in a kahuna, mostly green. Walt Disney, I'm in this stock, got in it recently, and it's in a powerful run-up, probably getting time to get out of it, not much in the way of massive earnings per share improvement, but certainly a nice-looking stock nonetheless. Time Warner, what a beautiful lower left, upper right chart. Kahuna on Friday, everything green. News Corp, pull back a little bit to that 50, follow with a kahuna and a pocket pivot, certainly an interesting time here as well. That looks attractive. Viacom B, similar. And the one I like and the one I took a position on when it pulled back earlier in the week was Lionsgate. Talked about this thing for a long time. The DMI crossover on Friday, everything green, 2 kahunas this week. And as you could tell on HGSI, it's got some earnings power. In fact, if we look at Lionsgate, we see a lot of, it's a turnaround play and then a lot of earnings coming into the stock. And again, even if it fell to 25 on a PE, which would be half of the growth rate, if it hits about 40, 25% is about $30, which is a nice run from here. So I like it. I'm an earnings hound. I've said it many times. All right, let me see if anything else looked interesting on the longs. A lot of REITs. I noticed the regional banks. On the shorts, let's take a look at what groups are short. Not surprising, the oil complex took a hit with the price of oil dropping. All right, so you can be like Jeff and you could do a top-down analysis and pick your stocks that way, or maybe what you'd rather do is be a more of a bottoms-up investor. So HGSI's got some nice tools for you here as well. We're at 51 minutes, 10 seconds or so on the recording. So one thing I like to do is the thing called group inclusion filter. So I've already done it, but what I do in group inclusion filter is I take a directory, I go into tools, group inclusion report, and then I'm going to go under the assumption that if these are lists of strong stocks, that if I have a stock, at least the bullish ones, not the bearish ones, that makes its way into a lot of bullish lists, then those stocks that make the most bullish list must be the most bullish stocks. So I run my group inclusion report, and then I dump it into my GIF All-Stars. And so I wanted to look for the top 30 stocks that I could find based upon my group inclusion filter. And scorecard no index is a balanced combo that's looking at both fundamentals and technicals, and you'll see a number of the stocks we've already looked at. Now, it gets printed out looking like this. So, for example, Santeris, these are all the different groups that Santeris was in. LinkedIn, Hertz, Sinclair Broadcast, Regeneron. So let's look at some of these. The best of Woodward and Brown, always one of the leading groups. Approaching new highs. The Big O filter, which is something that we created to mimic some of O'Neill's teachings. I own it, which is a nice thing for me. Delta Erg Crash, that's a filter that was built in, I think, in 2007, looking for stocks after the markets got hit. HGS 100, Market Smith 250. Accelerating leaders, top-rated IPOs, top-rated stocks, estimate beaters, young guns, accumulating mutual fund ownership. Sprinters, which is a technically solid group. Technical strength, I guess that fits. Relative strength with volume. Top 5 smart groups, daily and weekly bongo. Top vector best stocks. Is that not the type of stock that you want to be long in? And so all this is doing is it's pulling these stocks up to the top with me. I'm not in LinkedIn. I don't get it. So I didn't buy it, but there's a lot of these that I am. I'm in Hertz. I was in Sinclair. It pulled back this week. And same thing with Regeneron. I'm in Celgene still. Should be there. I'm in Valiant. I'm in Lionsgate. I'm looking at FleetCor. I'm in Home Away. Time to get back into Gilead. So these are a nice tool for me to find what's working now in the market. So let's look at these real quickly, and I'll make some comments. I don't know if people like that or don't like that. I don't get a whole lot of comments. Every once in a while I get a thank you, which I really appreciate for doing these. We already talked about Regeneron. Pullback, probably a buy. Lionsgate, pullback, a buy. DMI Cross, mostly green. Kahuna. Santeris, already talked about it, lower left, upper right, red potential. Gilead, so you notice doing one step with that group inclusion filter report finds a lot of stocks that we found on top down. Alkermes, we already looked at this one, breaking out. Celgene, Amgen, Valiant. All right, Home Depot. So lower left, upper right. I actually found this one to be intriguing when I've been in and out of. It's not a cheap stock, but it's certainly a nice lower left, upper right with a double over the period of time here. Earnings per share, stable, maybe a little growing a little bit. This one gets a premium to its growth rates. It keeps 24. It's a $96 stock. Certainly one that might be interesting to get back into. I like to buy it on dips and major market corrections. As I mentioned, Sinclair pulled back. Now, at this point, I'll be looking for a green candle low, a Kahuna, a pocket pivot, which would give me a signal to get back into this. Sometimes what I stick on them is a auto trading that looks for them to take out the prior day high and gets in at that point. Nexstar is another broadcasting company. These have had a great move. They make money. Probably worthwhile owning one of these. EW Scripps, another media company, although I thought this was just more print media. Publishing. United Therapeutics, expensive drug stock with great earnings, with falling earnings per share growth, but with great earnings. So I looked at this, and it didn't look so bad under Market Smith. It's got trades at a multiple about its long-term earnings. That's kind of low for it historically. Historically, it's had multiples up to from 8 to 153. If it makes its earnings, it's a $70 stock this year. Certainly from a charting perspective, it's pulling back to the 50 with a kahuna. Kind of a nice place to buy it. It's on my buy list. Hertz is one I own, has AVIX, in other words, AVIX, nice move up, pulled back to the 17, and then had a DMI cross and a pocket pivot, mostly green with another chance to buy. Lumber liquidators, I mean, if home building turns around, this one probably runs. It had kahuna on Friday, right off the 50-day moving average. It's easy to buy this one. You buy it here, you put your stop, probably a little bit less than 64. And you're buying it at 68, so it's about an 8%, 7-8% stop. If it holds the 50 and moves up, that's great. If it takes out your stop, you don't want to be in it. It's got earnings per share growth, but they're slowing down going forward. Toyota's an ADR that's all over the place. Skip it. Prestige Band Holdings, I think they own some over-the-counters and other products. PBH has been making my list. I would put it on my, frankly, boring list. Sorry to the company for a while, but boring may be a good thing to have. It's got 20% multiple, has big growth this year, slowing down next year, 90% multiple for 200% growth rate. You know, probably 20-25% growth potential in PBH. Can't remember if it pays a dividend. No dividend. Lower left and upper right. Alaska Air Group. Airlines have all pulled back. This may be one of the better looking ones. DMI crossover here. Perion is an Israeli company. They make an app called Credimail. They've got great earnings per share coming into the stock. This is one that I bought. Don't know anything about the company except what they do. I bought because 20 times 20 is $40. It trades at 11. If it can actually meet these growth rates, even if it keeps its multiple of 11, it's a double from here. Don't know much else about the company, just about its earnings and the fact that it's got a chart pattern that I like. I liked it back here, breaking above the 17 and the 50, but it's certainly on the right side of a cup. We'll see if it gives us a handle, perhaps here, and takes off. Avis is like Hertz in a nice run. Medicine Company, don't know this guy well, but they've got some earnings per share coming into the stock. I know that an older gentleman who spoke to us at HGSI, that's a great investor named Fred Richards. I wasn't going to say his name, that's why I used the age, but he is older than me, so I get away with that. This is one of his positions, and he's a smart investor. And after stubbing its toes in 13, it looks like it's got some major earnings coming into the chart. It might be a nice time to start to pay attention to Medicine Company as well. So this is a neat tool, this GIF, all good stocks. Fleet Corps, as I said, I'm going to start paying attention to it now. Pull back to the 50 and held. Give me a kahuna. Give me a green candle low. Give me a pocket pivot. I might want to get into that. Lithium Motors, we're now getting to the lower part of the list. It pulled back. Can't get above the 50 yet. I need to see it heal a little bit before I'm into it. Tupperware, nice pattern. Doji with a pocket pivot with a DMI cross, mostly green on Friday. Not my kind of a stock or a company, but let's just see if it's got any earnings coming in Tupperware. Trading about where it's probably going to trade in my mind. 16 times 6, grow 20% from there. Not a very exciting picture. HomeAway, this goes in my speculative group. This is a company that's sort of the eBay of individual rentals on properties. I mentioned this, I think, last week. I sat next to somebody on a plane who was telling about how great this company is and how they use them to manage their properties that they rent, vacation properties. And when I heard just over and over how great this was, and she's a pretty smart lady, I fear it was worth a play. It's not cheap from a multiple perspective. It's very early on in its life cycle, AWAY, and it's trades at a big multiple for its earnings. So use this when, this is when you buy with caution. If you buy it, it's speculative. I've tried to point out the non-HGSI stocks. Kroger's, boring, lower left, upper right, beautiful picture. At some point, this thing's got to slow down. Pays a 1.8% dividend. LinkedIn, as I said, I don't understand this stock because it gets, let's just take a look at it. And shame on me, by the way, because I use them, and since I'll be shortly leaving my current employer. Anybody who's looking to hire a burnt-out old physician that likes to invest, you have an email address, but you can see LinkedIn it's got great earnings per share growth, and I guess it's going to start to be worth its merit. It really started to bring in some earnings. If it hits these numbers and grows at 50 times, is it worth 100 times its multiple? Yeah, so that probably means it has some growth rate opportunity. But it's a stock that I guess the earnings are going to catch up with stock price. Coming up to meet its 50, not a bad time to be looking at it, and maybe I'll start to plunge in it, hopefully get it before a fundamental change. All right, so I've looked at the GIFs, a couple other shortcuts. You go into all securities, scorecard, no index. Let's go into up here under strategies, Woodward and Brown, reference library, and let's look at miscellaneous. Sprinters. This is a technical thing that will find some great looking stocks. Now, I don't like little stocks, so let me make sure I kill those real quick. No, I'm just going to leave this the same. So I would have skipped Rite Aid because I don't buy $2.46 stocks, but a lot of these are similar ones that we've looked at already. Here's a very short way of finding stocks with good groups and good relative strength. These are typically technically strong stocks using sprinters. Another thing that I like to use is go into, I'll put a scorecard on. I go into all securities and drop my scorecard, and I look at what's working best. We've seen the majority of the top 10 or 15 stocks already, so a very nice shortcut there. You can see the biotech story is very loud and clear. If I go into smart groups, here's a quick way of pulling together a number of different things. Smart groups are pre-planned scans. They're done for you every night, and some of them are, there's different, there's Connor's picks based upon some of his algorithms, Bible gap ups, pivots. Let's use a quick GIF here. So we're going to do gotta go out of this and into Designer. Group inclusion report. Now watch what I do here. This is a quick way of finding stocks. I want Bible gap ups and pocket pivots. So I'm going to start looking at which stocks are in a lot of different units. I want best of Woodward and Brown. I want best criteria, ERG 240, growth, HGS 100 leaders, stocks and groups moving to the upside, strong EPS relative strength, and quarterly EPS acceleration. I want to make a group from report. We'll call this Web Gem .21.13. I only care about the top 10. I'm going to hit OK. So here are the stocks that made it into the majority of the smart groups. These are, all right, so that was 3 minutes to find the same stocks we looked at. I go back into the program. Here they are. Top 10, and the only one that we haven't looked, there's two we haven't looked at. One's bio, one's pharma. It's because I only went so far down the list. Here is the Repligen. Don't know what they do, except they're in the biotech space. Pull back to the 17. Looks like it wants to run again. Sort of a flag taking off. Went from 6.8 to 9.5 is 3.7. So I'd be looking to get up to about 12 bucks from here. The other one is Acorn, which is another pharma company that's got some earnings coming in. So we've looked at a number of different tools that I do. Let me go back to my little plan. We've done everything on the left. We've looked at a couple of things on the right. Maybe next time we'll look at some others. And I'm going to talk to George. And George, if you view this, let's set up and do a live webinar maybe next week on Sunday night. So with that, I will bid everybody adieu. Go back to my little picture here. You're at your own risk here. Are we bouncing to take to a new high? Or are we going to break through that 50 and go to visit the 200? And I think that's the question. We had a nice day on Friday. Let's wait and see what the futures tell us the market's going to do. Pray the market you get, not the one that I think you should have or you think you should have. Have a great week investing. Everybody take care, and we'll see you again next time. Good night, everybody.